Now, the next chapter which you are going to study is the chapter of composition. Everyone over here, a B graded kind of a chapter. Sometime question comes, sometime question doesn't come. One attempt it comes, next attempt it might not come. So composition scheme, let's go ahead and study composition levy. So what happens in composition levy? I would like to first of all go ahead and give you a quick linking. Everyone over here, we started learning GST with goods or service. Goods or service has to be supplied. Supply can be either interstate supply or supply can be either intrastate supply. Interstate supply, sir, IGST shall be levied, and intrastate supply, CGST shall be levied. Sir, once GST is being levied, it has to be collected and paid by a taxable person. Listen to me very carefully. Once GST was levied under section number 9, some people went and told the government, sir, collect, pay, collect GST and pay. It becomes little difficult. So, sir, can we go ahead and can you go ahead and give us a simpler scheme wherein we don't want to take any ITC, we don't want to go ahead and charge GST. Sir, can you give us a simpler scheme which is there? Everyone over here. So people went ahead and asked the government, sir, we don't want to go ahead and collect GST. We don't want to calculate GST, set off GST and pay. Give us a simpler scheme. So government went ahead and told under section number 10, I will give you composition levy. So government went ahead and told composition levy, I will go ahead and give it for those people whose turnover in the preceding financial year was up to 1.5 crore or 75 lakh. Everyone over here now, listen to me over here now. So what is it going ahead and telling? It is going ahead and talking about a person whose aggregate turnover in the preceding financial year. Everyone listen to me very carefully. A person whose aggregate turnover in the preceding financial year is up to 1.5 crore or 75 lakh rupees. Sir, for whom 1.5 crore is applicable? For whom 75 lakh rupees is applicable? Everyone listen to me very carefully. 75 lakh rupees is applicable if you are in the state of Mantus. Sir, what do you mean by Mantus? M-A-N. Remember always M-A-N-T-U-S. M for Meghalaya, Mizoram and Manipur. If you are from the states of Meghalaya, Mizoram and Manipur. A for Arunachal Pradesh. Okay, sir. If you are from the state of Nagaland, if you are from the state of Tripura, if you are from the state of Uttarakhand, if you are from the state of Sikkim, then for you the turnover limit applicable is 75 lakh rupees. Done, sir. Point is clear. So Mantus ka case mein 75 lakh rupees. So if your turnover in the preceding financial year was up to 75 lakh rupees, then in the current financial year you will be eligible for composition levy. Okay, sir. I am from the state of Hoja. Sir, what do you mean by Hoja? H-O-J-A. H for Himachal Pradesh. O for any other states which are there. ठीक है. J for sir Jammu and Kashmir is there, and A for Assam is there. Always remember one thing: if you are from these states, then for you the turnover limit is 1.5 crore. Sir, what if I am there? One registration is there in this state also, one registration in this state also, then for you the lower limit will apply, that is 75 lakh rupees, because aggregate turnover when you see on all India basis. Done, sir. Point is clear. Mantus ka case mein 75 lakh rupees, Hoja ka case mein it is 1.5 crore. Okay, sir. So if your turnover in the preceding financial year was up to 1.5 crore or 75 lakh rupees, when you are going ahead and calculating this 50 lakh don't cut, I am cutting. Then you have to go ahead and check the turnover excluding interest or discount. Any interest income or discount which is there, please go ahead and exclude. Discount, basically you ignore discount part, you think it as interest. If interest is there, interest is to be excluded while calculating the turnover. Okay, sir. In the preceding financial year, if my turnover was up to 75 lakh or 1.5 crore, then in the current financial year, government says up to a turnover of 1.5 crore or 75 lakh, you don't cut anything in the chart. You don't go ahead and cut anything in the chart. Done, sir. I can go ahead and opt for composition levy. If I am going ahead and opting for composition levy, if I have three registration in three states, for an example, Baba, once you go and opt for composition scheme, all the registration will come under composition. So you have to go ahead and opt for pan wise at the rate all India basis to opt together. Done, sir. Sir, who are the people who are eligible for composition? Section number 10 1 goes ahead and says eligible persons to opt for composition scheme are manufacturer, are trader, and are restaurant. So if you are a manufacturer, if you are a trader, or you are a restaurant, MTR under section number 10.1, you are eligible for composition scheme. Always remember, if you are a manufacturer, you are a trader, or you are a restaurant, you have to go ahead and pay. You have to go ahead and pay GST on your turnover. CGST 0.5, SGST 0.5 on your turnover. Okay, sir. If I am a trader, Baba, remember one thing, for trader, specifically it is told that you have to go ahead and pay GST not on the, see, here it is turnover, and turnover includes taxable supplies, exempt supplies also. But for trader, it is only those taxable turnover which is there. Taxable turnover of taxable supplies. You don't have to go ahead, you have to pay only on 0.5 and 0.5 on taxable turnover. Basically, if GST rate is 0% on something, then it is exempt supply. On exempt supply, trader will not go ahead and pay, but manufacturers do pay on exempt supplies also. Be very careful in the exam. Restaurant or catering, on their turnover they will have to go ahead and pay 2.5%. 2.5%, this is their own obligation, they cannot go ahead and collect it from the customer. Done, sir. Point is clear. Always remember one thing, if my turnover in the preceding financial year was up to 1.5 crore or 75 lakh in case of Mantas, then in the current financial year I will get an option is to go ahead and pay under composition scheme. I have to go ahead and opt pan wise all India to opt together. Done, sir. If you are a person who is opting for composition scheme, who are the people who are eligible? MTR, manufacturer, trader, and restaurant is eligible. If you are a MTR, manufacturer pays 0.5, 0.5, trader pays 0.5, 0.5, but only of his taxable turnover, and restaurant pays 2.5%, 2.5% of their turnover. Done, sir. Sir, if I am a person who is eligible, can I go ahead and take ITC? Baba, always remember, you will not get any ITC if you are taking from a registered person. If you are going ahead and taking 9.3 or 9.4 wala supplies which are to be on which you have to pay the GST under RCM, then you have to pay GST at the rate of normal rate under reverse charge mechanism. For an example, you went ahead and took GTA services, you have to pay the GST under RCM at the rate of 5%. Normal rates. You can't go ahead and say 1%, 1%, 5, 1% I will pay, I am a manufacturer. No. Reverse charge mechanism at applicable rate has to be paid. The next, sir, if you are a eligible person, you have to go ahead and not to collect GST. When you are supplying, don't collect any GST. You just have to issue a bill of supply, and when you issue a bill of supply, your recipient will not get any ITC also. You can't issue tax invoice. Okay, sir, point is clear. Now, sir, who are the people who are ineligible? Very, very important for exam. Always remember, MINES. Mines are those people who are ineligible. Sir, what do you mean by mines? Always remember one thing. M for manufacturer. M for manufacturer of PAIT. Sir, what is PAIT again? Sir, P for pan masala, A for aerated water, those cold drinks, etc. I for carbonized drink, I for ice cream, and T for tobacco. So if you are a manufacturer of PAIT, then government have gone ahead and told you are ineligible for composition scheme. 1 minute, everyone. Okay, sir. Manufacturer of PAIT is also ineligible. Okay, sir. Done. Then, if you are a trader, always remember, trader of PAIT shall be eligible. Only manufacturers are ineligible. Done, sir. Point is clear. Now, the next one over here. The next one says interstate outward supplier of goods or services, means if you are going ahead and supplying from one state to another, you are ineligible for composition scheme. Interstate outward supply if you are doing. Sir, what if I go ahead and purchase interstate? Baba, if you are purchasing interstate, that is fine, but interstate outward supplier, whether you are supplying taxable goods, exempted goods, not even branch transfer, you can't do if you are doing interstate. you are gone, you will become ineligible for composition scheme. But no limit on interstate procurement. Inward purchase can be done from outside the state, but you can't supply outside the state. Supplier of non-taxable goods or services. Non-taxable goods or services, if you are going ahead and supplying, then also you are ineligible. NRTP or CTP is ineligible. Sir, supplying goods or services through ECO, who is liable to deduct TCS. If you are going ahead and supplying goods or services through ECO and ECO is going to deduct TCS, then also you are ineligible. Note, no restriction on supplying through own portal. You can use your own portal and supply. There is no restriction at all. Service providers are also ineligible under section number 10(1) to opt for composition scheme. But then government went ahead and told except restaurant and catering, and also manufacturer, trader and restaurant service providers along with manufacturing ka turnover, along with trading ka turnover, along with their restaurant ka turnover, they are allowed to provide little services. For an example, I am a manufacturer, I am allowed to provide up to 10% of the turnover or 5 lakh, whichever is higher, that much amount of services are allowed to me. Done, sir. Point is clear. What did I tell you till now? I went ahead and told you if my turnover in the preceding financial year is up to 1.5 crore or 75 lakh, in the current financial year, I am eligible to opt for composition scheme. If I am eligible, I can up to 1.5 crore or 75 lakh in the current financial year go and opt for composition scheme. When I am opting for composition scheme, pan wise all India I have to opt together. When I am opting for composition scheme, I can be a manufacturer, I can be a trader, I can be a restaurant. Manufacturer pays 0.5, trader pays 0.5, restaurant pays 2.5 and 2.5 of their turnover. But trader ka case may be very careful, only of their taxable turnover they pay, they don't pay of their exempt supplies. That, sir, point is clear. The next one over here is, sir, who are the people who are ineligible? Manufacturer of PIT. I for interstate. Everyone with me. I for interstate outward supplier of goods or services. Sir, N for non-taxable goods or services ka supplier or NRTP or CTP. E for person supplying through e-commerce who is going to deduct TCS, and S for service providers are also ineligible other than restaurant and catering wala. And if you are a person who is providing little services, then also it is okay. Otherwise, service providers are ineligible under section number 10(1). Done, sir. Point is clear. Then they have gone ahead and told MTR, manufacturer, trader and restaurant. Manufacturer, trader and restaurant. MTR. They are allowed to supply services up to the 10% of the turnover in state or duty, excluding interest and discount in the preceding financial year or 5 lakh, whichever is higher. Sir, what do you mean by this? So, for an example, I am a manufacturer, I am a trader or I am a restaurant wala. I can go ahead and provide little services that is being allowed to me. For an example, I am a manufacturer. This is my preceding financial year का turnover, ठीक है? In the preceding financial year, I was there in the state of Karnataka. Karnataka mein my turnover is supposingly in the preceding financial year only 60 lakh rupees. Interest income which is also there is 10 lakh rupees. They have gone ahead and told Ramesh, remove this interest income, and in the current financial year, along with your normal turnover, you can also go ahead and provide 10% or 5 lakh. 10% means 6 lakh rupees or 5 lakh, whichever is higher. That much amount of little services you can provide. So along with your manufacturing turnover, you can provide little services, which is 6 lakh rupees ka services over here. Yes, sir. Point is clear. I would like to go ahead and tell you once again. Listen to me very carefully. For an example, I am there in the state of Delhi. I am there in the state of Delhi also. I am there in the state of Assam also. Okay, sir. For Delhi and Assam, the turnover limit applicable is 1.5 crore, sir. Done. In the preceding financial year, for an example, my Delhi mein turnover was 50 lakh rupees. Assam mein also turnover was 50 lakh rupees. Interest income over here was 20 lakh rupees. Interest income over here was 20 lakh rupees. Can you first of all go ahead and tell me, sir, what was my turnover in the preceding financial year? Whenever you are checking last year ka turnover, always remember you have to exclude interest and discount. So I can go ahead and say my last year turnover anyways excluding interest and discount is only 1 crore rupees, and I am eligible for composition in the current financial year. Yes, sir, I am eligible for composition in the current financial year. eligible. Now that I am a manufacturer eligible, I went ahead and asked the government in the state of Delhi how much services I can go ahead and provide. Government told 10% of the turnover. 10% of the turnover means 5 lakh, or maximum is also 5 lakh. So I will do one thing. I will make it 40 lakh over here for simplicity. ठीक है sir, 4 lakh rupees or 5 lakh, whichever is higher. तो sir 5 lakh rupees का services I can provide in Delhi. Sir, what about Assam? Assam you can go ahead and provide 10% of the turnover. 10% is 5 lakh, or 5 lakh is the maximum, whichever is higher. So sir 5 lakh rupees ka services you can provide in Assam also. Always remember one thing, that is what is being told over here, that sir manufacturer, trader or restaurant wala allowed to supply services up to 10% of the turnover in the state or UT, excluding interest and discount in the preceding financial year, or 5 lakh, whichever is higher. So when you are going ahead and calculating this 10%, don't go ahead and include any interest. Done, sir. Point is clear. Now that I can provide 5 lakh rupees ka services in Delhi also, and 5 lakh rupees ka services in Assam also, sir, when I am going ahead and receiving interest in the state of Assam, or I am receiving some interest in the state of Delhi, that is also an exempt service. No sir, but they have gone ahead and told in this 5 lakh, also interest income will not be included. Basically you can provide pure services. Other than that interest wala services, you can go ahead and provide up to 5 lakh in Delhi also, up to 5 lakh in Assam also, not interest income. Done, sir. Point is clear. So it says after calculating 10% of 5 lakh, exclude interest or discount in the current financial year also. Next. Baba, here you have to remember 4 lakh or 5 lakh, whichever is higher, it will come 5 lakh. In here you have to remember 5 lakh, which is 10%, or 5 lakh, whichever is higher, so it will come 5 lakh rupees over here also. Yes sir, point is clear. Chalo, let's go ahead. Sir, always remember, if you are a composition dealer, you will go ahead and make payment. Payments are being made quarterly by 18th. You are going to use CMP 08 and make the payment. Sir, how does it happen? So how many quarters are there in a year? Quarters are fixed: April, May, June, July, August, September, October, November, December, Jan, Feb, March. 4 quarters are there. So for 1, 2, 3, 4, 4 quarters, every quarter ka you have to make the payment and file CMP 08. Okay sir, every quarter whatever is the turnover, you have to make the payment and file CMP 08. You have to go ahead and every quarter you have to make the payment and file CMP 08. Sir, this quarter also you have to make the payment and file CMP 08. Done, sir. And for this whole year, they have gone ahead and told only one GSTR4 is to be filed, and GSTR4 is to be filed by 30th of April. GSTR4. Okay sir, done. And sir, also for a composition dealer, they have gone ahead and told quarterly CMP 08. After making the payment, you have to intimate, and sir, return GSTR4 annually by 30th April. Also for a composition dealer, it is being told that once your year gets over, once your 1 minute. Once the whole year gets over, this year gets over, by 31st December, you have to go ahead and file your GSTR 9A, which is your annual return. Yes sir, point is clear. GSTR 9A by 31st of December. Next, always remember, a composition dealer has to mention in his invoice that he is a composition taxable person. Basically not the invoice, the bill which he is going ahead and issuing, bill of supply may, he has to mention that he is a composition taxable person and not eligible to collect tax on supply. Mention on the notice board or the sign board, the notice board etc. pay, he has to mention that he is a composition taxable person, and so that anyone who is entering his shop knows that he is a composition taxable person and he will not give a tax invoice. Done, sir. Point is clear. Now, sir, tell me one thing. If I want to go into composition, if I want to get into composition, how do I get into composition? So, if my last year turnover is up to 1.5 crore or 75 lakh, then in the current financial year, if I am going for composition scheme, always remember one thing. One can be, if you are going for a new registration, taxable person, if he is obtaining a new registration, simple it is, when you are taking a new registration, in your registration form, when you are filling part B of GST REG 01, there is an option to tick saying I want to opt for composition, and your registration comes as composition. This is one option. The second option which is there, registered person switching to composition. If you are a person who is going ahead and switching, you are normal person now switching to composition. Everyone listen to me very carefully over here. You were a normal person, normal registration you are taken. Now you want to switch to composition. Always remember, whenever you are switching to composition, switching ke liye, you have to go ahead and file CMP 02. See over here, you have to file an intimation prior to commencement of the financial year in CMP 02, and supposingly you have 3 branches in 3 states. Sir, do I have to go ahead and file CMP 02 in all the states? So they have gone ahead and told one intimation pan wise is enough. You don't have to go ahead and every state wala registration mein you don't have to file CMP 02. One state mein if you go ahead and file CMP 02, enough. Pan wise required and not state wise. In every state, you don't have to file CMP 02 to opt for composition scheme. What are the 2 ways to opt for composition scheme, sir? New registration. New registration, when you are filling your part B of GST REC 01, just tick and your registration will come under composition. Sir, if I am going ahead and switching from normal registration to composition registration, then sir, if you are switching in that scenario, CMP 02 to be filed online. Always remember one thing, because you were a normal registered person, you had taken the ITC. So on this date, whatever input in and capital goods are there with you, on which you had gone ahead and taken the ITC, now you will have to go ahead and reverse that and you will have to file GST ITC 03. See over here, file a declaration ITC 03 within 60 days from the date of commencement of financial year. Section number 18.4 read with rule number 44 says all the ITCs which you have taken on your input and capital goods, you have to reverse it, because as a composition dealer you are not eligible to take ITC. You would have already taken the ITC. Whatever ITC you have taken on input and capital goods, you have to go ahead and reverse. So basically, when you are going ahead and doing the reversal, you have to go ahead and file ITC 03. That's a form to be filed. Done, sir. Point is clear. Everyone listen to me very carefully. The next one over here is intimation 02. What is intimation 02? If you want to switch into composition scheme, you have to file CMP 02. Sir, do I have to file CMP 02 every year? No, Baba, you don't have to file every year. Not required to be filed every year to continue under composition scheme. Once you have filed, unless you become ineligible, it will continue. Done, sir. Applicability. Whenever you are going ahead and seeing whether you are eligible for composition or not eligible, you have to see pan wise turnover. Complete India ka turnover is to be seen. Only then you will be able to say whether I am eligible or not eligible. Aggregate turnover has to be seen for checking applicability, whether you are eligible for composition or not eligible. Whenever you are making the payment, everyone listen to me very carefully. In the preceding financial year, you were there in the state of Delhi also, you were there in the state of Assam also. Always remember, all the turnover has to be done total and then you will check eligibility. Done, sir. Supposingly this is the current financial year, you have a turnover in the state of Delhi also, you have a turnover in the state of Assam also. When you are making a payment, always remember, of the Delhi ka turnover, CGST and Delhi SGST 0.5 to be paid in Delhi. Of the Assam ka turnover, CGST and Assam SGST to be paid in Assam 0.5 and 0.5. Always remember, payment has to be done state-wise turnover pay. Compliances, returns and records also has to be filed state-wise. Done, sir. Point is clear. Here one important point is there. Whenever you are going ahead and determining how much is the tax payable, what will be the turnover? Always remember one thing, everyone. Supposingly I have gone ahead and started new registration. I have gone ahead and just now started the business. Now I want to go ahead and ask you for an example over here. This is my first year of business. Okay, sir, done. Now I started from 1st of April. Okay? From 1st of April I started till here. I am a manufacturer. Till here my turnover is 40 lakh rupees. Here my turnover is 40 lakh rupees. Once I cross 40 lakh rupees, once I exceed 40 lakh rupees, only then I will go ahead and take registration under composition. My question to you guys is, for an example, for the first 40 lakh, I don't have to pay anything. Why, sir? Because I was not eligible only to take registration. Now, I went ahead and crossed 40 lakh a turnover. My question to you guys is, sir, till here the turnover was 40 lakh rupees. Till here, supposingly my interest was there 10 lakh rupees. And then after that, till the year end, this is the year end, 31st March. Now here I went ahead and further made a turnover of 60 lakh rupees, and interest income is also 10 lakh rupees. My question to you guys is, when I am going ahead and telling how much tax I have to pay, when I am calculating the tax payable, can you all tell me on what turnover do I have to pay tax? For this year, when I am going ahead and saying on what amount I have to go ahead and pay composition ka tax, on what amount do I have to pay? First of all, always remember, you will go ahead and exclude interest. Secondly, because till here you did not have to take registration only, this turnover pay also you don't have to go ahead and pay any. This turnover pay also you don't have to pay any tax. For tax payable, you only have to see 60 lakh rupees. Yes sir, point is clear. See, turnover in state for tax payable, turnover in state or UT shall exclude from 1st of April up to the date of becoming liable, means this turnover has to be excluded. Secondly, you also have to exclude from turnover in state, exclude exempt supply of service, which is interest or discount. So interest has to be excluded. So if I tell you what is the turnover on which you have to go ahead and make the tax payment this year, only on 60 lakh rupees. My next question to you guys, this was 18-19. Now 19-20 के लिए when I am checking eligibility, whether I am eligible to opt for composition or not, can you tell me what is the preceding financial year ka turnover, when aggregate turnover of the preceding financial year, when I am checking eligibility, this year, last year ka, what will be the turnover when I am checking eligibility? Can you tell me, everyone? Sir, when you are checking eligibility, always remember this plus 1st April up to the date of becoming liable, that also has to be included, but interest or discount will never be included, and hence it will be full. Last year aggregate turnover will be how much? 40 plus 60 lakh, 1 crore rupees, and hence when last year aggregate turnover is 1 crore rupees, I am eligible. Interest is never to be included. Everyone see over here, for determining eligibility, aggregate turnover means when you are checking whether you are eligible or not, you will see last year turnover, and aggregate turnover may always include supplies from 1st April up to the date of becoming liable, means this turnover has to be included. So 60 lakh plus 40 lakh, that is my last year ka turnover. Next, sir, but exclude aggregate turnover say always, whether it is turnover, whether it is aggregate turnover, in composition remember, exclude the exempt supply of service, which is interest. Done sir, point is clear. Now here we are done with section number 10.1, section number 10.2. Listen to me very carefully. Now service providers are ineligible. But specifically, government went ahead and told, if you are a manufacturer, trader or restaurant wala, everyone listen to me very carefully, manufacturer, trader or restaurant wala, and you have gone ahead and provided services which is more than that 10% of 5 lakh, whichever is higher, or you are a only service provider, you are providing services, then government have gone ahead and told, see, you can go for section number 10.2a. This is one option which is provided. So if you are a person who is not eligible under section number 10.1, means you are a manufacturer, trader or restaurant wala, but might be you would have gone ahead and provided more services than that 10% of 5 lakh, whichever is higher, then government went ahead and told, for you, we will go ahead and give you an option of section number 10.2a. For an example, I am a chartered accountant. For me also section number 10.2a is open, and it says I have an option. If my turnover in the preceding financial year, everything remains same, but only you have to see if your turnover in the preceding financial year was 50 lakh. So 50 lakh in which state? Baba, any state may, if your turnover was 50 lakh rupees, aggregate turnover, then they are going ahead and telling, Baba, option to registered person with aggregate turnover less than equal to 50 lakh in the preceding financial year. So last year turnover, my turnover, if it was up to 50 lakh rupees, then in the current financial year, I will have an option to opt for section number 10.2a. It goes ahead and says, if you are ineligible under section number 10.1 or 10.2, please come to section number 10.2A. They will help. Okay, sir. But section number 10.2A may you have to go ahead and pay a tax at the rate of 6% of the turnover in the state or UT, excluding interest or discount. When you are going ahead and paying the tax, always remember you have to pay 6%, 3% CGST and 3% SGST. Sir, what is the condition? Aggregate turnover in the preceding financial year should be up to 50 lakh rupees and you should be ineligible under section number 10.1 or 10.2. Then you can come for section number 10.2A. Section number 10.2A goes ahead and says, if you are a person who is MINE, then you are ineligible. Sir, who is MINE? Means they are going ahead and telling if you are a manufacturer of PAIT, then also you are ineligible. I for interstate outward supplier, then also you are ineligible. Non-taxable goods ka supplier, then also you are ineligible. NRTP or CTP, then also you are ineligible. As for, sir, S is not there, E is there. E is if you are going ahead and supplying goods through e-commerce, who is going to deduct TCS, then also you are ineligible for section number 10.2A. Same as section number 10.2, only S is not written. Why? Because this is a scheme which is specifically for service providers only. Yes, sir. Point is clear. So if you are ineligible under section number 10.1 and 10.2, then you can go for section number 10.2A, provided your preceding financial year turnover was up to only 50 lakh rupees. Yes, sir. Point is clear. Here I have just gone ahead and given the difference between normal scheme and composition for you to read. One important point, everyone listen to me very carefully. Section number 10.5 goes ahead and says, for an example, you went ahead and took composition scheme in spite of being ineligible. You are ineligible to take composition scheme, but still you went ahead and took. Then it says, proper officer has reason to believe that registered person is not eligible under composition scheme, or you have already done some contravention and you are ineligible under composition scheme. Then your proper officer will first go ahead and give you a show cause notice. Show me the cause why I should not throw you out of composition. He will give you a show cause notice. You have to go ahead and reply within the next 15 days in CMP 06. Once you go ahead and reply, PO will go ahead and issue an order in CMP 07 within the next 30 days, whether you are allowed or he might go ahead and deny you composition also. If he denies you composition, he will tell Ramesh, from this day you are ineligible, till this date you paid tax under composition at the rate of 1%, but on your item 18% was applicable, so remaining 17% he will recover from you along with interest. Yes, sir. Point is clear. If composition is denied, pay the differential tax plus penalty. Section number 73 and 74 relating to demand and recovery shall apply. Mutatis mutandis. Yes, sir. Point is clear. Everyone listen to me very carefully. You were carrying on composition scheme. Sir, what if in between the year I cross the threshold limit? Sir, what if in between I want to voluntarily withdraw? Sir, what if I violate some condition? Then they are going ahead and telling, sir, if you are going ahead and voluntarily you want to withdraw, then you have to file an intimation, suo motu. Always remember, whenever it is withdrawal, you have to file an intimation, which is CMP 04 within 7 days of the event. Always remember, it is, sir, today I violated the condition, within 7 days I have to file CMP 04. But, sir, in case of self-withdrawal, if I want to withdraw myself, then CMP 04 before the date of such withdrawal means when you already know that you want to withdraw from composition, then in that scenario, CMP 04 to be filed before the date of such withdrawal. Okay, sir. Always remember, once you go ahead and withdraw. So, for an example, sir, I was under composition till here. When you were under composition, you did not take the ITC, but all the input which is there or capital goods which are there, now you are eligible to take the ITC. So, to take the ITC, because you are a normal person now, earlier you were under composition, when you want to take the ITC, you have to go online and file ITC 01. That is what is being told. Details of input in stock, semi-finished goods, finished goods and capital goods ka detail has to be given. Section number 18 1C is applicable, read with rule number 40 within 30 days from the date when the option is withdrawn or when the officer has gone ahead and passed an order denying you composition. From that day you have to go ahead and file ITC 01. I'll tell you once again, everyone listen to me very carefully. Whenever you are coming inside composition, you have to go ahead and file CMP 02 and ITC 03. Whenever you are getting out of composition, you have to go ahead and file CMP 04 and ITC 01. Be very careful, everyone. Yes, sir. Point is clear. This I had gone ahead and told over here. This I have gone ahead and told over here. Here we are done with your chapter of composition levy. Everyone listen to me very carefully. This is a B graded chapter. Sometime one question comes, sometime one question doesn't come. But the most important area to note here is section number 10.1 means what is the rate which is applicable. Sir, who are the people who are ineligible? This place may many times they want to trick you by going ahead and saying trader of pan masala. Sir, traders are eligible. Be very careful. Section number 10 to A related, they can go ahead and ask you a question. They can also go ahead and ask you a question on this. MTR is allowed 10% additional services which are there, that you have to be careful. Marginal services related. And sir, how to determine aggregate turnover, how to determine that turnover on which you have to pay the taxes, that also I have gone ahead and explained you. Here I will go ahead and close my chapter of composition levy, everyone.